I'm Ashton Addison from EventChain for Investment Pitch Media and FinTech News Network. And today on Blockchain Interviews, we have Mish Schneider, the Managing Director of MarketGauge.com. Mish, welcome to the show, and thanks for taking the time to be here.
Thank you, Ashton. Such a pleasure to be here today. Thank you for having me.
Likewise. I'd love to kick off our time by just first getting a little bit of background on yourself in the finance industry. What are your recent focuses and your philosophies on investing right now?
Okay, well, we'll start quickly with the background because it is definitely unique. I started out as a special education teacher and consultant and wound up going down to the commodities exchange right around the turn of the decade in 1980. So I've been doing this for quite some time. And I went kind of on a fluke with a friend of mine who worked down there for Merrill Lynch. And it was one of those proverbial light bulbs that went off in my head. This is really where I want to be and what I want to do. And so it wasn't so easy, but I did eventually get a job. And I spent 13 years on the commodities exchange, pretty much a member of almost every exchange by the time I left. And then, of course, everything changed. We went upstairs. Electronic trading became the thing. And I married Keith Schneider, who's the CEO of MarketGauge. And he was already working on technology to make it easier to trade from upstairs. So MarketGauge was formed about 20 years ago, 23 years ago. And I didn't really join until about 10 or 11 years ago. And so in the last 10 or 11 years, we've really been sort of soup to nuts, able to teach people, if they've never traded before, tools to help them trade. We have quant models. I run a discretionary service. We have courses. Pretty much if you want to be a day trader to a full-time swing trader and everything in between, that's kind of what we're doing.
Very exciting. And yeah, I've followed your work, and it seems like you're covering the stock markets often with Mish's Market Minute, and there's just so much to talk about, especially in 2020 here with everything that's going on in the upcoming presidential election and the markets. So I'd love to get your take on the equities markets right now, which is a lot of Americans have become interested in and have jumped into it and looking for higher yields. The market continues to grow heading towards the election, despite a little bump on Monday. And it seems like the trend is your friend and we're continuing to go up, but there's word of caution from others at the same time. How are you approaching the market moving into the election and post-election?
Well, what's so interesting about right now, as you say, the market has definitely gone up since it fell and bottomed out in early April. And a lot of that has to do, of course, with the Fed, which started the ball rolling by being extremely accommodative. And then stimulus started passing. So here we are now, a week before election, and the stimulus package still hasn't passed. And on top of that, we have this wave now happening in the United States again with the pandemic. So there's going to be a question on whether the death rate will go up, whether the hospitalizations will max out, and whether or not we'll have further restrictions as far as closing businesses again. So the complacency that we were seeing in volatility up until really this week was bizarre considering all the bubbles around. So what we've done right now is we have kind of a cautious, more commodities-based focus in our portfolios right now in terms of the discretionary account. We have models that are still long some of the NASDAQ stocks, but that are the high-flying NASDAQ stocks. We also have a small cap growth model. We also have an alpha rotation that's in the S&P 500 and the NASDAQ. But these are all small positions. In terms of the discretionary trading, what's really interesting is that almost full circle, I'm almost back in all the commodities I was in when I first started. When I first started trading commodities in the early 80s. And so that's where I feel right now. I feel like with all the stimulus, all the debt, all the money supply that will still be hitting the market, the uncertainty, the social unrest, and potentially a contested election, we could actually be looking at something we haven't seen since the early 80s, late 70s. And that's inflation, which was really more of a stagflation. So that's how we're positioning ourselves right now.
Yeah, that's really interesting. And yeah, the Congress has taken a rest at least until after the election in terms of getting more stimulus for the American people. But they did provide a lot of stimulus to Wall Street, and it seems like a lot of capital's been flowing into the stock market. And it doesn't seem like there's a limit to that. Do you expect more injection, hopefully to the American people as well, but definitely into Wall Street and just continue going until the divergence between the market and the economy becomes really, really great?
Well, the Federal Reserve has already said they're out of tools, basically. They can go to negative rates, but they really don't want to. Short of actually buying stocks themselves, which legally they're not supposed to, but BlackRock has sort of been doing it for them. And they've been buying junk bonds and they've been buying high yield investment grade bonds, corporate bonds. Short of that, they don't have much left to do. So they are urging the government to inject more stimulus.
Mm-hmm.
And then it'll happen. There's no doubt it'll happen. How it looks really is going to depend on who wins the election, because the Democrats have a very different idea than the Republicans. And then to add to that, if we do not have the type of situation where we have gridlock because we have a Democrat president and a Republican Senate, or vice versa, we have a Republican president and a Democratic Senate. So much right now is really up in the air. Stimulus, I think we can all agree, has to happen. The government is not going to allow the economy to collapse from here. The other factor, of course, is what happens with the pandemic, because both parties have very different ideas about what to do about it. The Republicans are more in the camp of let things open, because the recovery rate is nothing compared to the devastation of the economy staying closed or closing down again. And the Democrats are more into the, well, let's step back, let's get this under control. So the fact that the market's holding right here is basically because they know, or it knows, that whatever happens, there'll be some money. But we really won't know how everything rotates, I think, until a few days after the election.
Yeah, it's definitely seems like an unprecedented time in terms of managing money and dealing with the different types of risk, including political risk this time. But there's also, just because of the stimulus and the pandemic prior to the election, there's all of these other risk factors involved. In terms of people that have been following the stock market and equities market since April, and a lot of retail investors and regular workforce has sort of gotten involved, what should they look at for leading indicators? Besides who wins the election, what kind of leading indicators in the equities market, whether it's the bond market or other markets, should they look at in terms of seeing the direction of where the equities will move after that?
Great question. Well, there's a couple of ways to look. One is because we were floor traders. In fact, our whole company, all the principals were floor traders. That's where we all met, was down on the floor. There's something called an opening range, which means on a daily basis, the market opens, and within the first 30 minutes, there is this sort of a significant edge in that most trading ranges are made in the 30 minutes. So if they go up above it or down below it, there tends to be follow through. We're going to take that a little bit broader out and maybe look at the range of the actual opening day post-election. And then I think not only as the overall market goes, but looking at individual sectors, you'll have a better idea of how to play the market in terms of, is retail, for example, going to continue up, or are we going to look at some major disappointment as we go into the seasonal holiday shopping and consumers aren't buying? Same thing with transportation and with the growth stocks and the NASDAQ, et cetera. So we will wait pretty much that 24-hour and look at that as almost a reset. Now, from the outlier standpoint, I'm a big watcher of the dollar right now. We actually, vis-a-vis this show, have been long Bitcoin for some time and actually took a second profit target today, being Tuesday. So that was nice. I think Bitcoin's telling you that the currency instability is something to watch, could hurt the market in general. Obviously, interest rates are something to watch. And I would also be watching the bonds, the junk bonds and the high grade bonds, as I was mentioning before, because if the Fed stops playing there, or what they've done there cannot sustain, then I think we really are going to go into a much riskier environment. If they hold up, and we can see the market hold up and the actual range, let's say day 2 or day 3 breaks out of what we see the first day, just follow it and don't overthink. That's what I try to tell people. Try not to overthink too much. So much doom and gloom out there. And if you'd been listening to it for the last several months, you wouldn't have made any money.
Yeah, well said. And I do like that perspective on following the opening range after the election. So I'll definitely keep that in mind. And what you mentioned about Bitcoin as well, it's been so hot, not only the equities market, but Bitcoin hit a low of around 3,000 when the crash happened in March. And in the recent weeks here, it's gone from 10,000 to now 13,000, almost 14,000 in a day. And when Bitcoin likes to go up, it likes to go up quickly. What's your take on the legitimacy of the Bitcoin rise this year versus last time Bitcoin's all-time high, went up quickly and sort of crashed back down? And it seems like there's a lot more institutional interest in place already with chartered banks and all of these other companies coming in, as well as public companies coming in, putting Bitcoin on their balance sheet now.
Or PayPal, which now allows you to pay in Bitcoin. Well, there's been a lot of changes to the whole space. As one who is a baby boomer, I can tell you that in the original launch of Bitcoin, when it went parabolic, pretty much people over 40 were not involved. They didn't understand it. They didn't think it was legitimate, didn't think it would sustain, kind of thought of it as just sort of a new shiny fandangle generational thing and not something real. Now that's totally changed. So you're seeing more baby boomers getting into it. Paul Tudor Jones, by the way, just came out and said that Bitcoin was probably the safest place to be. So I really believe in the future of it. Now, how it evolves in terms of standardization, who gets their hands on it, government regulation, et cetera, remains to be seen. But I think it's very much a metaphor for the younger generation, which is they're tired of the manipulation and they're tired of being victim to what the banks are doing or the lobby groups are doing, and even the currency wars that we've seen around the world. And I think that's where Bitcoin turns out to be the winner in all of this and will continue to be the winner.
Yeah, well said. And it's definitely, it's a larger movement than just owning a currency and being diversified. It also has, it's a political movement, it's a political statement. And especially with the dollar devaluation, as you're talking about, it seems like more public companies are starting to hold Bitcoin on their balance sheet and have said that they think that it will preserve wealth better than the dollar. So that's super interesting. Do you see Bitcoin as more than just a diversification or a hedge to the market in terms of actually providing value, or something similar to gold? And what's your take on having hedged assets like precious metals in Bitcoin just as a diversification tool from the capital markets as well right now?
I think it's definitely something to look into. And since we're already in Bitcoin, obviously, we're not just talking the talk right here. We really believe in it. And then in terms of gold, well, one of the things that we started to mention before in terms of the outlier, which really relates to the dollar, but also relates to the result of the whole pandemic, is what happens here with commodities in general as we're going through shortages, whether it be in steel, copper, or in food commodities like soybeans, corn, and wheat. We're in a situation right now where, as the dollar continues to go down and the supply chain disruption continues and the labor force is low, we get into a psychological change, a shift of hoarding. And that could all relate also to Bitcoin as sort of a grouped into that as this hedge, as you mentioned, not only also the actual food commodities themselves, but getting back to gold as well, which has been sort of sideways now for the last 2 months, interestingly enough. And I think it's because of that complacency factor, number one. But now I think that's about to change. We were long gold from April until right after Labor Day in the United States. We got out and that was it. We've been flat. And we bought a small starter position today, as a matter of fact, because we can sort of see that the Bitcoin could sort of be the waterfall that leads now into these outliers to hedge against the uncertainty, which if the election is contested, which people have hinted at, and social unrest in this country, which has already been percolating, increases, where are you going to go? You're going to go to Bitcoin because the dollar will collapse. You're going to go to gold, and maybe you'll go to treasury bonds as well. Maybe. And that's if the commodities don't go too crazy, because then the Fed will not be able to be so accommodative.
Yeah, well, it's definitely uncertainty in terms of what's going to happen. And I think that it is a great opt-out and opt into something different by, at least researching Bitcoin and holding a little bit. And you don't have to follow the crazy people that put all of their eggs into one basket. You know, a lot of these, like Paul Tudor Jones, they really just put, I think he put in 4 or 5%, but people are even just saying 0.1% or 1%. And it's more the asymmetrical risk of these assets, the potential for them to go up. And of course, there's that potential to go down as well. But is that a factor that you considered, is, you know, the asymmetrical risk in these types of investments?
Absolutely. We're pretty well diversified right now, although, as I said, in terms of the actual discretionary account, we're long most of the soft and food commodities, just got back into gold, and emerging markets, particularly China, is also something that we're looking at as well.
Mm-hmm.
But you know, everything we do, doesn't matter what we do, we're always looking at the risk factor. We're traders.
Mm-hmm.
We're floor
Mm-hmm.
traders. Even though many years have gone by, we've learned lessons that we've never forgotten. One is not buying a falling knife. Two is always having a stop loss. In fact, entering every position with the idea of how much I'm willing to lose in relative to how much overall equity you're trading and how many positions you have on. You never
Mm-hmm.
want to wake up one day and the world goes to hell in the handbasket and you're wiped out. You don't really want to ever lose more than 7 to 10% of your overall portfolio if that happens.
Mm-hmm.
And then, of course, the same thing on the flip side. So even though we're long Bitcoin, we've taken 2 profit targets. We take money off the table at multiples, and then we leave a tail. So that leaves us the opportunity to ride the trend if it keeps going, and also put in a pretty wide trailing stop so that we get out, but leave enough room for the volatility that happens in between.
Wow, all great tips, Mish. And we're out of time, but I know that you have a lot more work and literature on preserving wealth and helping people in the markets. What's the best way for them to follow your work?
Well, I'm on Twitter a lot at Market Minute. That's really a good place if you actually want to ask me a specific question. I'm very engaging and I answer everybody, no matter how busy I am. 2 is I do a lot of media appearances. So if you want to hear what I have to say on our website, MarketGauge, there is a tab called Media, and we update it constantly with my different media appearances, which I'm very vocal about my views on the market or what positions we're in. And then I'm on Instagram, Mish Schneider, LinkedIn. I mean, it's really almost impossible not to find me if you're looking. So, and you can email me, mish@MarketGauge. I'm always happy to talk to people.
Wonderful. I will leave those links in the description box below for the viewers. Thank you so much, Mish, for taking the time to come on. All the best moving forward with MarketGauge, and let's follow up in the near future.
Would love that. Thank you, Ashton. It's been a real pleasure to meet you.